My name is Mariela Osario, and I'm the Career and Small Business Specialist. And today we are fortunate to have with us Alejandra Cruz, who will be presenting Your Credit and You. But before we begin, I would like to remind everyone that today's programming is being recorded, which I will be happy to share with you. At the end of the presentation, you will see I will share with you our contact information so that you can reach out. In the meantime, it is my pleasure to introduce to you Alejandra Cruz, and bear with me while I share my screen and I tell you a little bit more about him. There we are. Alejandra Cruz is a training and mentoring officer at UCEDC, a statewide nonprofit economic development corporation that provides loans to startup and growing businesses, government contracting assistance, and training workshops to entrepreneurs and small businesses. Prior to joining UCEDC, Alejandro held project manager positions at Microsoft and solar renewable firms in New Jersey, creating financial forecasts for business startups. He also served as lead consultant for 3 years for an economic development center in South Jersey. Welcome, Alejandro. Oops. Thank you so much for joining us today.
I can share my screen. So if one, okay. I can start right now. Let me know. Can you see my credit, yes. My presentation? Good. Yep. So welcome everyone. Thank you so much, Mariela, for giving us the opportunity to present this topic. We know how hard it can be for small businesses and people to just understand their credit. And the main purpose of the presentation today is to learn to give you more information about how the credit is calculated, why it's so important, and make the credit become an asset for you at the end of the day. That's what we want. And the most important part is to learn how it works. Why is important? Because a lot of people don't know if the credit can affect them not only in the financial part, but in their personal life. And this is critical because we are going to take a look at that, okay? So as Mariela said, I'm part of a nonprofit organization called UCDC. We've been working for over 40 years, helping the community in South Jersey and North Jersey. We have 3 lines of services. We provide loans, training, and government contracting. I'm going to talk a little bit about who we are and the services, just so you know what we do. On the lending part, we're a community development financial institution. That means that we work directly with the SBA. On regular circumstances, the SBA will not lend directly to people, but use organizations like us and banking organizations like PNC, TD Bank, all of those have the similar programs to provide these services. The difference between us and a regular bank is the loans capacity. For example, for a microloan, we offer everything between $5,000 and $50,000. For Community Advantage, everything for loans between $50,000 and $250,000. And the 504 commercial loans, we do 40% of the complete loan up to $5 million. So the loan can be up to $12 million. We only do $5 million. But why we offer a small loan like $5,000 to $50,000? Most banks won't have the appetite to do all these loans. Why? Because the underwriting process is so complex that when they complete and approve the loan, they have spent so much time and money going through all the process to approve it that they're not going to make money. So they're not most of the time they're not willing to give money to small businesses, and this is where we come in. Our sweet spot, most of our clients are one lending between $15,000 and $25,000, and that's how we can help them. One of the things, as we work with the SBA, we do commercial lending only. So for clients, we help them with the commercial loans. And we have also, thanks to the SBA, we have a technical assistant and training part. And this is everything that we do. We do workshops like this one. We have everything from business training, entrepreneur training courses. We haven't done this in a while because this is one live in a classroom. And with the COVID-19 crisis, we have not done it over the past year and a half now. And we have business mentoring, one-on-one consulting. If you have any question about how to go over your business, if you know anyone that has questions on their business, please let us know. You will have my contact information. And this is really important because a lot of people will pay to get services that you can get for free. I might not be able to help you, but believe me, I know, and a lot of people in my organization know of other programs that are state or nation or federal funded, and they can provide assistance to your business at no cost at all. So basically, all these programs are prepaid with your taxes, and you have to take advantage of that, okay? And we have two special programs. We have Entrepreneur as a Second Chance, and this is for re-entry population. If you know a re-entry citizen that wants to open a business that is serious about that, let him know about this program, Entrepreneur as a Second Chance. And you can go to our website, ucdc.com. Under training, you will find the application and you can apply. It's really easy. It's a wonderful program, 7-week program, free of charge. We want to help them out too. The other program is Virtual Incubator Program. This program is for established business that have 2 or more years of tax returns on their hands and that are minority owned, LGBTQ plus owned, because we know how hard these businesses have been hit with the current crisis and before because they don't get a lot of funding. So we want to give funding at some point to that through a process of analyzing their business, making sure they can improve their position and be able to move forward with their financial goals. And then we have PTAC. In New Jersey, this is really important. If you want to do contracts with the government, you have to be part of the PTAC. Take advantage of that. So they offer free seminars, one-on-one counseling, registrations, and certifications, everything to understanding the GSA, the Government Service Administration. That's a database in which you can find lists to submit proposals. And remember, depending on your county, you can find someone in New Jersey that can help you with that. And this is a free service. Remember, it's a free service. If you go and someone say like, oh, I can help you with that, but it's gonna cost you thousands of dollars, please remember that there's a lot of organizations that can help you for free. If you don't know where to go, contact us. Go to 1-800-Jersey-7. That's a wonderful organization that helps businesses in New Jersey, and you can get a lot of things done. Also, the SBDC, I will send all this information to Mariela, and so she can send an email with all those links, all the organizations we know, they're for free, and that can help you out, okay? So, as you know, thank you, Mariela. She introduced me. My name is Alejandro. I'm here to help you out. That's the most important part. I want you to know that I'm really excited about helping small businesses, people that want to improve their quality of life. That's something I'm really happy to do. And that's why I choose to go through the path of nonprofits to help you guys. So what we want to do today, I want you to describe how to read a credit report, identify what makes a credit score, provide tips for improving your score, discuss who uses credit scores and why, and dispel credit score myths. But the most important thing, if you take anything out of this webinar, I want you to take the following, that you can improve your credit score. The credit score is just a snapshot, just to see how well you're doing, if you're good at your paying your credit. So it's a snapshot, a specific period of time, and that's it. But when you start working on your credit, it can actually have great benefits at the end of the day to you. And I'll explain later on the presentation. First, when you, before we start the presentation, I want to tell you something. There's a lot of organizations and companies that say, oh, we can repair your credit in 1 month. We can improve your credit by 100 points. That's not how it works. What happens with those organizations is they're gonna call the credit bureaus and say, hey, that account is not mine, it's not mine, it's not mine, all of it. So they will dispute everything in your credit report. What happens is when you're disputing that, the credit bureaus have to take it out of your credit report. So it won't affect your credit and it will improve it right away. But when they find out that it's actually your stuff, it will come back to your credit report and your credit will go down. So please never pay for a credit report repair or things like that. There's organizations, like I told you, that can help you out with that. And the most important part is that you have to create a habit of using your money wisely in a way that it will always improve your credit instead of creating coming debt after debt after debt, because that will reduce your credit score. And at the end of the day, what you will be doing is paying more interest rates if you get loans, if you have a credit card, things like that. So this is the most important part, I think, about credit. It's basically a knowledge. So what we want to do is access what products and opportunities you need to have in place to build a strong credit. So things like create a budget. Do you guys know have created a personal budget? How much money do you use in a monthly base? Even if you're not working, what's your household budget? This will give you an idea of the minimum amount of money you have to make in order to cover your to keep your quality of life, right? But if you do this, most of the time you will find expenses that are called ant expenses. Expenses that are so small. For example, you go to Wawa every single day to buy a coffee. That's $1.50, $2. But when you add up in a yearly basis, it can be hundreds and even thousands of dollars. So you want to identify those expenses that will affect your financial position. So this is really important. So that's one of the most important things is about knowledge. Understand to build how to build a strong credit, and the most important part before you start building a credit is understand your position at the moment. So if you're able to create a household budget, do a personal financial statement, and do put all the assets, all the liabilities, and know your net worth, that will be huge. Today, we'll be talking about access, what products are out there free of charge that can help you identify what's on your credit and how you can improve it in taking into consideration those. And after that, that's gonna be improving your credit, having a credit score because you know how everything is calculated. And if you know that, you can take actions to improve it. So that's the most important part here. Your credit can become an asset. Why? Because remember, understanding your credit reduces your credit stress. For example, it reduces the interest rates you will be paying. It's not the same to be on to have a credit score that's in the 800 and having a credit score that is in the 550 to 600 rate. Why? Because if you are in that rate, most banks will have an assessment. Remember, that number, the credit score, is an assessment of the risk that you possess to the bank. The higher the number, the lower the risk. The lower the number, higher risk, right? So if you have a lower score, what will happen is the bank will give you money, but because you're more risky, at the end of the day, you will be paying more tax, more interest. Sorry about that, more interest because if you're more risky, maybe you at some point you will not be able to pay, and as a lender, you want to cover yourself. You want to cover everything, and the best way to do it is to have really high interest rates, so you recover your money as fast as possible. Don't associate credit to debt. This could lead to greater suspicion, to quick fix, and predatory credit repair scams. And those are the ones that I'm trying to tell you about. If someone comes like, oh, $600 and I will repair your credit in 1 week, in a month, no. A regular process will take a couple, more than a month, I will say, to 6 months or even a year to improve your credit. Because it all depends on where you start. But the most important thing is that it has to become an habit. Remember, if you can control your finances, you can actually reduce your stress levels, because finances are really, really important to know what you have, what you have, and how you can create a plan in order to achieve your goals. So that's the most important part. And your credit can empower you. For example, if you have a really low credit score, well, likely if you go to buy a car, maybe you will find yourself in a position that you find a car dealership that has predatory loans. So basically, they will lend you a car, give you a car, but then you will be paying 35% interest rate for that car, and it doesn't make sense. So that's one of the things that you want to avoid. And the same way goes empower you. Credit, how can the credit empower you? If you're gonna rent, landlords will run your credit score just to know how risky you are, how good are you at paying your bills, because all of that information is gonna be there. So those are why it's so important that we change our credit from being a deficit into being an asset, being something that we can actually work with. And here is basically all the parts of a credit report and credit score. Remember, credit report is all the summary of the credit history. Everything that you have done before is gonna be buy for credit cards. All of that is gonna be there. Credit score is a risk model issued by lenders, other businesses, to provide a snapshot assessment of credit information at a moment in time. And this is key. Remember this part. Credit information at a moment in time, so we can change it. The picture from today is not gonna be the same picture we take a couple of days or even a month from now. So everything changes and we can improve it. But remember, the most important part is that most of the things that you want to do is the credit report, prepare your credit report. And these are going to be 4 sections inside the credit report. That's the personal identification information, the credit history, public records, and inquiries. Let's go ahead and talk about each one of them. So for personal information, we're going to include everything, include full name, date of birth, social security number, current and past employees. And this is really important. For example, my name, you can see my name here in the box, in the chat box, basically, Alejandra Cruz. You would not believe how many Alejandra Cruz are in California. So there's people with my same name. And what happens sometimes is that they put some of their, and it happened to me, they put some of their debt in my credit report. So it's really important that you take a look at all of that. So if something like this happens, you can dispute it and they can take it away, so it doesn't affect your credit. Other things, for example, when you you request a credit card, for example, in Macy's or a store. Sometimes they write your name wrong. They put another letter, they take something else, and that's fine. For example, with me, sometimes I don't know why they think my last name Cruz is my first name, and Alejandro is my last name, so they put it backwards. But it doesn't matter. It's my that's my account, so it's fine. So you will, if something that like that happens in your credit report, it will come like alias, and then it will put those like changes on your name, but just check those out, okay? Credit history includes open, active, and inactive trades lines and their derogatory information, collections accounts. Think, but remember, collections accounts are not the same. You will not see the same effect. You have a collections account, for example, you have a Netflix, and you stopped on Netflix a couple of years ago, but the last payment came after you said like I don't want it, and it came, and you were not aware of that. So it's $9.99, and it says Netflix. That derogatory information was at Netflix. 2 years ago, you didn't pay $10. But if you're reading your credit report, or a lender is reading your credit report, they say like, oh, Netflix, and they can make the conclusion that, oh, it was only one time, he was late, it's okay. And the same goes with, for example, if you have late payments, the same can be read the same way. If you have late payments, 30 days or 45 days of one account, it's fine. Maybe one time it happened to me that I got a credit card that it will expire. I got a new one, and I completely forgot to change all the payments of my older credit card to my new one. And they say like, oh, you have not paid. I'm like, oh, why? But that didn't affect my credit report, because it's understandable. It's something that happens. It's just once in a while, and that's it. But if you have a case in which is every single month you see the same trend, then it will affect you. So that's really important, is to discover what is the use of your credit, how you're using your credit, and how you can improve it at the end of the day. So public records, everything, bankruptcies. Bankruptcies are really bad, because remember, if you're a lender, if you give money to someone and someone says like, no, I'm gonna pay you, don't worry about it. 1 year from now, they say, you know what, I cannot pay you, sorry about it, and that's it. Or I just can pay you 10% of my whole debt, that's it. That's basically bankruptcy for a bank. If you give money in good faith to someone, and someone says like, hey, I'm sorry, I'm not gonna pay you, that's it, man. Do whatever you want to do. So if you declare bankruptcy, first of all, it will say on your report for 7 years, but the effect is going to have on your access to credit is going to be even higher, because who will give you money if you know that the last time someone gave you money, you didn't pay? So a lot of people will say like, okay, we can give you money, but you will have to rebuild that confidence they have, that relationship that you had with the lender community, and that can take a while. And in the meantime, they can give you credit, yeah, but what's going to be the interest rates? If I was going to give you a loan and I knew you have a bankruptcy a year ago and 2 years ago, my interest rates are going to be really high, because I want to protect myself as much as possible. And maybe I won't give you a lot of money. That's the other thing. I will try to limit everything to access that. Mariela, please go ahead.
Quick question for you, Alejandro. I understand bankruptcies can negatively impact your credit score. Could you be able to differentiate between bankruptcies and foreclosures? Foreclosures. So, for example, how do foreclosures affect your credit score, and for how long?
Well, foreclosures are basically is more a negotiation between you and the bank because you're not able to pay, so you will sell your asset to repay the debt.
Mhm.
So you're paying the debt at the end of the day. It can affect you in a negative way, but not as much as a bankruptcy. Bankruptcy
Okay.
is you will, for example, if you're in Chapter 11, you will only pay, I think, like 10 cents per dollar of what you own. And that will affect actually at the end of the day how much money a bank can get. When
Mm.
and when a foreclosure happens, is that someone is behind, is paying their asset, but and the bank owns part of the property, and in order to close the loan, in order to avoid a bankruptcy, they will just take that loan, that asset, and just sell it over to cover that. So it will show, it won't show if you cover everything, but but it will be part of the history of your history with the bank, basically. So it's better if you're in a circumstance like that. Foreclosure is better than a bankruptcy. Okay.
Okay. And
Uh,
how long does it stay on your, how long does it show on your credit score? I'm assuming it shows on the credit score.
well, the foreclosure. Let me check something. But the foreclosure, uh, as this is a negotiation, they have a negative impact on your credit score, but it will not. But as this is going to be some derogatory information there, but the most important part here is that it can affect you, but it was not as bad as the bankruptcy, as I told you before. But they will stay, let me say, basically 120 days delinquency. It will show
Okay.
for 120 days.
Oh, okay. That's not too bad. Okay, thank you.
Okay. Yeah, and remember, sometimes lenders will not even consider people that have foreclosures uh, on to lend them money because it's almost as bad as bankruptcy. Is not as bad that, but it's closely related to the same kind of not paying your account. So it's bad too.
Okay.
Okay. So let's go to increase. One of the most important parts here in increase is that you have to differentiate two increase. One is soft inquiry and the other is hard inquiry. And just soft inquiry is, for example, something like UCDC or other organization that's helping you to improve your credit report and credit score. We will take a look at everything single account that appears, everything we will run it, but because you're not buying anything, is more for inquiry reasons, for educational part, so it won't affect anything. But for example, if you're buying a house, if you're going to buy a car, those will be, and those the dealerships will run a hard inquiry because most of the time they want to know if you're good with paying your bills, all of that, and if you they can give you access to their lines of credit for the cars. So they will get all of that. And if you're buying a car, a property or something like that, try to visit all the car dealerships in the same week because that way, even if they do you go to 5 or 6 different ones, they will run each one of them. They will run your credit report. It will only appear as one inquiry because it's in the same period of time. But if you wait You go today and you go from 3 months from now, it will show two increase, three increase. That way, it will impact you more. So remember, you want to reduce impact. You want to have those increase done in the same period of time, okay? And credit scores. So really, really important. So as we're a commercial lender, we look the credit score in two ways. A lot of people say like, oh, I have my business and I want to get a loan just with the credit score of my business. But here is the thing, when you're a small business owner, they will run both credit scores. And when I mean both, it will run the owner's credit score, credit report, and it will run the company's credit report. Why? Because at the end of the day, you will be paying, right? So they want to have both stories just to know where you are. And it's really important that when you're talking about the industry, you have a company, you have to understand that every single industry has a different risk assessment. They have different risks. So the credit score should be completely different from one industry to another. It's not the same to have inventory on site, um, perishables inventory, than to don't have anything, just selling a service. So you have a different risk assessment. So that's really important. So the best way to understand the risk assessment is just to understand the industry itself. And if you want to learn more, we can run an IBIS report. Just contact me, contact anyone at UC, contact me at UCDC, and we can start that conversation. So you can be able to access that and know where the industry is going, the forecast, the risk assessment, what's the average and credit score of one company. So that's of the industry and the company. So that will help you know where you have to be on that industry and what will be acceptable for your business. Okay. Any questions here? No. Okay. So what you're looking here is a small table about payment history, a strong credit profile, and when a person is rebuilding the credit profile. So in payment history, really a good person is that someone that has all payments on time, no serious delinquency history. And when I'm saying no serious delinquencies in history, it's something like, oh, late payment because I changed my credit card. Oh, the Netflix payment that I never made because I thought I had made it. So simple things that are not trends that you don't see it every single month, every single period, but you can see them like once in a while. That's good. Consistently using existing credit accounts. This is really important. A lot of times what we've seen is that people don't want to access credit because they don't want to have debts. And it's understandable. And this happens because sometimes people come from a home that they saw this. They saw that having debts is not the best way to go over things. But if you don't have a credit history, how a bank is gonna know how good are you at paying for a home or paying for a car? They will not know. And if they don't know, they might give you the credit. But what's gonna be the interest rate? And remember, the interest rate is key here. Just take an statement of your credit card and see the minimum payment on the back of on the second page of the credit card. It will say, if you make the minimum payment, you will be paying, for example, for a debt of $1,000 over a 15 years period, you will be making 4,000 payment on interest rates. So $4,000 in interest rates, that's a lot of money. And when we're saying that the interest rate is key, is because of that. You don't want to pay more than the next person that's because you're getting the same product, you're getting the same thing. So why will you pay more for that, right? And this is why the credit score. So really important. If you don't have a credit score, try to get a secure credit card from a bank, $1,000. And a secure credit card is basically you go to a bank with $1,000, you pay the $1,000, they give you a card, you can use up to those $1,000. But what I will suggest is that most banks want you to use a credit card for only 10 to 30% of the whole money they gave you. So it was gonna be from $100 to $300 on a monthly basis. That's what they want you to use and no more. And that way you start building confidence with the bank. And after 6 or 7 months, they will give you the money back and you have a regular credit card. That's something that you want to do if you don't have it. Okay, so let's go to payment history. That's the most important. Outstanding debt. Users under 10% of revolving credit. Revolving credit is a credit card. Basically, you pay it. If you have $1,000 on your credit card and you use $100 and you pay those $100, you have that $1,000 to use again. So it's revolving, it's moving like this, it's a circle. So outstanding debt pays off balance before a statement's due date or before that I said to the bureaus. So remember, you can be late. You can be late to 35 days late and it will put like a flag, but it won't be that bad. So most of the banks won't do that for late payments, but it's really important to know that it's not the same to have a late payment of 10 days than 90 days. After 90 days, everything is going to the bureaus, and that will affect you really bad. All revolving accounts keep balances very low, as I told you. Length of credit, long history on file, experienced credit users. So this is really important. For example, if you have that old Macy's credit card that you have for the last 8, 9 years, don't cancel that because that shows a really long history relationship with one lender. So it's really good for you. Online increase, online apply for credit as needed. Shopping around for the best rates or for auto loan or mortgage within a 2-week period. So those are the things that I told you that if you're gonna look for increase for those kind of assets, just do it in the same period of time, 1 week, 2 weeks. That's when it will work for you. Okay. And credit mix, different types of credits can manage payments consistently in a different ways. For example, you have car payments, you have rent, you have credit card. It will show that you have a different range and you're using your money wisely. That's the most important part. But remember here, the most important thing is that if you have payments, all serious delinquencies that are over 90 days, and numerous late payments, 30 to 60 days. And those are the ones that I tell you, don't worry about that. If you have ones like 30 days over, it's fine, 35, 40 days, but never over 90 days. That's really, really bad. Questions so far? They wouldn't have questions, but one of the most important things here, remember, is credit score is just an assessment on that specific period of time. It's a snapshot. Remember, it's a snapshot of your position right now, and it will change. It can change. It can improve. So that's why you're here. We can help you improve that. So we have talked about all the different parts of the credit score, like payment history, outstanding debt, length of credit, increased credit mix. But when you take a look at those, this is actually the weight on the score itself of each of those parts. So for example, payment history is 35%. 35% of the whole score is calculated based on payment history. That's why I was telling you guys that it's really important to have a credit score That's sorry, a credit card that shows a long relationship with the lender is good. It's really good. Uh, Amounts owned 30%. How much do you own and how much of your available credit have you used? So all of this. So I was telling you between 10 and 30%. You should not be using more of what uh, a bank is giving you. That should be good, because if you use more, then they start talking about your capacity to repay. Remember, capacity, character are things that they evaluate as a lender evaluates the borrower, character, credit, um, capacity, all those things are evaluated. And the most important part here is if you have that capacity. So always keep it like 30% and below. That's really helpful. End of credit history, 50%. And this is what I was telling you. If you don't have a credit card, if you don't have credit because you don't want to have debts with anyone, then all of this is zero for them. And if you request a loan for something like a car or a home, it's gonna be really hard to get it. And if you get it, it's gonna be expensive. And a lot of people say like, oh, but I can pay cash. Yes, but remember, cash can get you so far. If you have a credit line of credit or a credit, it can get you further, right? So that's the kind of thing that you have to think about that. Type of credit use, 10%, credit cards, retail credit, student loans, mortgage, all of those, because you don't want to see a concentration in just, for example, that you have retail credit. That's the only thing that you have. You don't have anything, and you're using more than 30% of the total credit line that you have. So that can become a red line for us as we identify who you are, what are you doing. So it can be hard to give your credit based on concentration on one just line of credit. So it'd be really important. New credit, how much of your available credit is new? So this goes all the way to capacity, specifically this, based on how much money do you own, all the payments that you have done, the length of your credit, the type of credits that you have. Can you get the new credit, and do you have the capacity to repay those? Okay. So there's a lot of ways you can start accessing your credit score, a credit report, sorry. The first one is the most important one, I will say, is annualcreditreport.com. This is a free service. You can run all your transcripts on TransUnion, Equifax, and Experian. The thing here is that it will give you the credit report, all the transactions, everything in the transaction. It will not give you the credit score. So I know a lot of people have their banking on their phone, and if you go to your bank, you will be able to access your credit score, right? I was gonna show you with mine. So you will be able, let me open this really quick, and I will show you. You will be able to open your credit. Your FICO credit score, right? And it will show something like this, right? This is the FICO credit score. So it's not the credit score that banks use. They calculate it in a different way. What happens with the FICO credit score is gonna be up and down between 10 and 15 points. So if you see that credit, the FICO in your bank, just calculate it. If you know that you're doing really well, everything, just calculate 10 points over, if not 10 points down. So it will give you basically a set that you can play with, and you will know where you are basically. Okay. Oh, sorry, and I forgot about the Equifax data breach. So a couple of years ago, Equifax I had a data breach, and they lost over 120 million social security numbers, I think. So as part of how they can repair the confidence with the public, they created this service called Credit Personal Services Free Credit Reports. So you can run uh, up to 6 credit reports a year for free with them. It will not affect your credit report. You can until 2026. This is how you go there. Will go to equifax.com /personal/credit report services /free credit reports, or call this number. And remember, these are really good tools. I will say annual credit report if you just want to see how your credit is doing, and you don't want to do you don't have the need to repair your credit score. One of the things is that, for example, you can run the TransUnion report in January, the Equifax in July, and the Experience in October or November. So you will cover the whole year basically with these 3 reports, and those are for free using the annualcreditreport.com. Really key here, you have to use annualcreditreport.com. There are really similar names out there, and if you click to the other ones, they will request a $20 just to run the reports. It's not a scam. It's misleading, I will say, marketing, but it's not a scam. It's from one of these guys from TransUnion, Equifax, and Experian, but you don't have to pay those fees. You can go directly by using that website. Things that are not considered in credit score. For example, race, sexual orientation, all those things, religion, it won't be affecting those, so you don't need that and to worry about that. But it's really important that you know those kind of things, okay? So a lot of people want to know, okay, what credit score do I need to access a loan? And it's not only about the credit score, it's just one leg of the share, basically, the credit score, because a lender will see other things. You might be able to have an exceptional credit score, 800, let's say, but you don't have the capacity to get new loans. So if you don't have the capacity, then it's over. We cannot give you a loan. So everything is not every decision is based on the credit report and credit score. This is just one of the elements that the banking system and the lenders use to make that determination. But it's really important to understand that if you know your credit score, you understand how it works and how can you improve it, you will have the capacity to get new loans. So that's the important part. So let's go back to this slide. So credit score, exceptional, 800 to 850, very poor, 300 to 579, fair, 580 to 669, good, 670 to 739, very good, 740 to 799. I will say that because of what happened with COVID-19 and a lot of small businesses go under and those kind of things, this changed a little bit. So fair is gonna start in 680. It's gonna start up basically. If you're gonna get a loan, if you wanna request a loan, you should be looking at more of 680 for banking threshold for personal or business loans. That's the minimum. Before it was 650, it was fine, and even 640, it was considered okay. But now it has changed a lot. So it's really important that you know this, okay? So who uses credit scores and why? Lenders. They want to know the risk assessment of, are you good at paying everything? Yes, this will give you them that part. So if you're good at paying all your debt, the lenders will know with your credit score. But that won't give them a whole idea of your capacity to repay new loans. How good are you paying new stuff? So they will have other documentation and other things. But this is a really good uh, point to start, because if you have a really poor credit score, they will not even consider you to see for a loan or anything like that. Landlords, the same thing. Consider this, consider that you're a landlord and you have to rent 2 apartments that you have. And you know this guy, he comes, he's really great, but when you run his credit score, it's really poor, it's 520, 530. So this is really hard because you say 530, and when you run it, you see that you have delinquencies, derogatory information, all of those things. So at the end of the day, even if he's a great guy, when you see this information, you have to make the determination not to go with him, or maybe you make that determination because it's too risky. And this is your source of income. So you might be just moving into a position that you don't have to be worried about getting paid. So that's why landlords use it, because they want to be confident that if they rent you something, you will pay them. Because at the end of the day, this is their business. This is how they make money. This is their income, right? So they want that. Employers and potential employers. Imagine this, you're gonna go and work in a bank. They run your credit report and credit score just to see if you're good at managing your money. Because if you're not good at managing your money, why will I give you the money of someone to manage? Right? So that can be like no, I don't want to pass. And it depends on the industry, but on the banking industry, when where's money, you might want to see that kind of things. Insurance companies, the same thing. Insurance companies just want to know the risk assessment. Everything for insurance companies is about risk assessment. And a credit score that's too high, that's too low, is the higher the risk, right? So if for a company, they just look at numbers and they crunch numbers and they know that 350, if someone is paying with a credit score and the 51 is 550, 560, maybe they don't want to do business with them because it's too risky for them. And simple as that. Now I want to show you a credit report. So you see all the 4 different parts that we discussed earlier before. And this is the basic Experian credit report that you will see. The first one is all the information or the personal information that you have. Then the second part is the index. Most likely when you go to annualcreditreport.com, you download a PDF, so the index will not work most of the time, but you will have that information. So everything potential negative items. So for example, all the regulatory informations, account status, types, all of that will be included here, including bankruptcies, liens, judgments, information obtained directly from the courts. All that information will be here. For example, child support and all of that, I think they're not included anymore, but it can be also include some other court filings there. Okay. The third part is that all the negative items, and it will appear like that, like main county clerk, address, blah blah blah, status detail. This item was verified and updated on April receipt, civil claim, paid, unpaid. All those things will appear here, really well detailed, with amount. For example, the date filed, date resolved, all of that, responsibility, individual, all of that. The fourth part is the credit items. And this is something that we always take a look at that. And we take a look at, for example, the type. Installment. Installment is, for example, a car. You pay a monthly payment. That's an installment, right? So installment, date opened, reported, data status. They will say how many times that you have paid. Term, 12 months, payment, zero, responsibility, credit limit, high balance, recent payments. And if you're late, let me show you with this. If you're late, it will appear here. In this section, it will appear month. If you're late 1 month, 2 months, it will appear like 001, 002, things like that. So it's really important that you understand that. Oh, let me take the annotate and clear all drawings. Okay. Accounts in good standing, list of all the accounts that you have perfect, that there's no problem. And this can go, it can go 20, 30, 40, 50 pages of accounts. So remember, it's not gonna look like this. This is like the template that they will use. But depending on how long have you been opening a business, the payments, it will take pages and pages and pages. I've seen credit score of 50 pages. So be aware of that, okay? Accounts in good standing, the same thing. And the last part, this is accounts type, indicates whether your accounts are revolving or, well, this will, accounts in good standing, okay. And this is really good. And at the end, let me see. Oh, this is what I was looking at. Okay. So accounts in good standing, it will tell all the information. Basically, this almost the same way the credit items in this page work. It will be the same thing on this page, but once again, it will go like probably like if you're late or everything, it will be called 0, 0, 1, 0. You can read those and learn really quick how to use them. So I won't go into that. The last part is who has requested your credit score. So the increase. And the increase, for example, home sale, realtor code, you say like, oh, he was looking for a home right away. If you see cars, dealerships, so you say like, you may see like 10 or 15 increase, and in the same period of time, you say like, oh, he was looking for a car. So those won't be bad, but it's good to have them like in the same period of time, so you will know what they are from. And remember, those are really important that you do it in that period of time that I told you, like between 1 and 2 weeks. So they will appear as just one inquiry and won't affect your credit report. Once again, those are hard inquiries. The soft inquiries that are for educational purposes will not affect your credit score and will not appear here, okay? Okay, let me see. Okay, and remember when I told you this John Quincy Adams, this is your personal information. It's really good to go to the last part, because in the last section, it will appear every single detail about yourself. And basically, it's from your current address to your social security, to your current employer. Okay, so all of that information is going to be here. So it's really important that you take a look and make sure that everything that appears on your credit report is yours, is not one else. Okay. Okay, one of the questions that we always get is, oh, how many credit cards shall I have? And the answer is, it's fine to have 5, 8, it's fine. The most important part here is, how do you use those credit cards? And how do you manage them? Why do you get so many? For example, I always ask, what's the interest rates on them? So it's always really good just to take a look at the fees, for example. Do you have any fees? That's one of the main questions I always get to the people is like, okay, so if you have 3 or 4 credit cards, what are the fees you're paying for them? And then do you use them? That's the other question. Because sometimes people get the credit cards for a specific buying purposes, and then they never use it, and then they get hit with fees. So it's really important. Just take a look at the ones that you use, the ones that you don't have really active. And if you don't have active, take a look at the fees. And just call them and say, hey, I love your credit card, but I cannot pay your fees, or can you, or get something else. Because if you call them, most likely you can be you're able to negotiate something with that. So it's really important that you're in contact with your banks. Okay. Credit meds, checking credit reports lower your credit score. No, it doesn't lower your credit score because as I told you, is more likely a soft increase, so it will be fine. You have only 1 credit score. No, you have 3 credit scores. You have Experian, you have Experian. I always forget the other 2. Equifax and TransUnion. Remember, Experian, Equifax, and TransUnion, those are the credit score reports that you will have. The higher your salary, the higher the score. No. Unfortunately, it's not like that. It all depends on the debt, on your credit history, if you have paid everything that you have, the capacity, if you're not that in debt. So it doesn't depend on that. Paying all debts will immediately raise your score. No. As we said, a credit report tells a story, right? Tells a story over a long period of time. If you paid everything today, that's fine. That's fine for you. But what's going to happen in the next 6 months is going to tell how your credit card report is going to move, how your credit score is going to move. If you can pay everything and you continue with the same trend of getting a lot of debt, using a lot of your credit card, then it will affect you. So it's really important that you know that. Credit card offers can hurt your score. No, as I told you, it's not about that. It's about how you manage your credit, how you use those services that the banks provide. That's the really important part, and that's what will affect you. Okay, Maria, were you gonna say something?
Yeah, I just had a quick question. How easy is it to dispute a charge that may negatively affect your credit score? I've had some clients come in and they're saying, I got this letter, I paid it, or, I had insurance and it took a while for the insurance to pay off whatever debt it was, but now it's affecting my, it was reported to the credit bureaus. Is it easy to dispute a charge? And how do you go about that?
Yeah, it's easy. It's really easy. We have some letters. So I will send you those, Mariela, directly to you. And basically what you have is to write a letter to them, but I have the language. You dispute specifically what happened there and the support documentation and send it over. But I can send that document to you so you have it. And if a client has a question, you can just give them a template on how to move forward with that.
That would be great. Thank you.
You're welcome. And let's move forward. So, can you change your credit score? This is one big question, and the answer is yes. That's why you're here, right? So yes, you can change your credit scores. So I think that's all we have for today. As you know, I'll be sending a lot of information to Mariela. Mariela will send an email to you with everything that we covered today, including this presentation deck. I'll make a PDF of this, send it to Mariela. Mariela will send it over to you guys. And if you have any question, please let us know. Please let Mariela know. We can move forward and make sure that we help you out. Okay, thank you.
Great. Thank you so much, Alejandro, for a very thought-provoking presentation and for making our programming such a success. Like Alejandro mentioned, we will be more than happy to share with you the slides of today's presentation, as well as any letters that may be beneficial to you or family, friends, business owners, or clients, if you feel you need to dispute any credit charges that may affect you negatively. So thank you, Alejandro. I really do appreciate all your help and your time for sharing your suggestions and your expertise. And again, making our business workshop such a success. So I do want to share, if I can find it, I did want to share our contact information with our audience. If you have any questions, again, please feel free to contact me or Alejandro. I can be reached at the library. Wait, am I sharing this? I
No.
always do that. No, that's what I thought. Hold on one second, people. Sorry, always do this. I've been doing this for so long, you'd think I'd know it by now. No, I can't find it. Here we go. Okay, guys, sorry. Am I sharing? Now can you see it?
No.
No. Okay, here we are. Okay, guys, I think I got it.
Yeah.
Okay, so again, this is our contact information. I can be reached at the library. Please feel free to reach out to Alejandro directly through his website, ucedc.com, or through his email. I'm sure he'll be more than happy to get back with you as soon as he can. And please be on the lookout for future small business webinars. They're all virtual. We have them both in English and Spanish. If you would like to be added on to our email list, again, please contact me at the library. I'll be more than happy to accommodate you any way I can. All right, guys.